Hey, happy Wednesday, everybody. Welcome to the closing beat. How you doing out there? Good? Your boy's getting tan up in here, right? The summertime hits, the sun cooks us down here in Florida, right? I got a face for radio, but it's getting tan. Hey, we're financial advisors here at Jazz Wealth. Appreciate you joining us. Welcome. We talk about the stock markets here, try to teach you something new and, give you an idea of what's going on out there just on a day-to-day basis. We're not short-term traders. We are long-term investors for our clients here at Jazz Wealth. Hope you'll check us out. Ranked 66th best advisor in all of America. I don't know if you think that's high or low. I mean, I think that's pretty good. There's like thousands of them. So, that's what it is. Anyways, let's get started with the markets here today because I'd like to dive into some things. So look, you can see the chart here. Up to highs, right? So we had this pullback down to what we call the 50-day moving average, always the blue line. And we were talking about this the other day that, you kind of want to see that immediate bounce from there. It helps you start to gain confidence that the uptrend is going to continue, or at least this portion of the uptrend is going to continue. Well, when you get that, that gives people the all clear to go, oh yeah, it was just a small pullback. We're good. There's no damage, no problems, nothing to worry about. Well, today we came out, or ADP came out with more data that said, hey, hiring is slowing down in the U.S. Normally that would be bad news, wouldn't it? But it's good news this time because we want the Fed to stop raising rates. They were hoping that they could start cutting rates, or at least that's the prediction at the moment. So bad news turns into good news for the stock market. Maybe not the economy overall, but remember, we had a whole lot of hiring going on, so it's okay if that takes a little bit of a break. The Fed is trying to slow things down without ruining the world, essentially. And hey, so far so good. We could play a Monday morning quarterback on some things here. You like that? Thank you. But, otherwise, they're doing a good job here at the moment. So it starts making people think, yes, okay, they're going to stop raising rates. And in fact, we may see a rate cut this year. I don't know about that. But it gives that belief there. Now, also, Indeed.com, the job site, they actually came out with data. This is yesterday's data, but this correlates to what ADP said. So they said, well, look, hiring is slowing. And in fact, the way they post it is the job listings, right? So the number of job listings, I put it by region here just so you could see in case you're, somewhere else in the country. You can see that the number of job postings on Indeed is actually dropping as well. So it's a good sign for the stock market because it means that the economy slowing will get the Fed to cut rates, which means that companies can borrow cheaper, which means they'll have a higher profit margin, or hopefully, and which means their earnings should be higher. See? It's that easy, right? So anyways, I just wanted to share that with you, that's the kind of, what was going on there. By chance, when we look back, said by profession since COVID, where's all the jobs at? I thought it was really funny. I don't know if you can see it. Yeah, you can see it there. The biggest growth since COVID, an 87.5% increase in those who provide therapy since COVID. So, that one kind of adds up. Physicians and surgeons, second biggest growth, civil engineering, personal home care, and health, all kind of in that medical space, roughly. Veterinarian, well, that makes sense too with the people that got dogs. And down at the bottom side of things, big decline in software development, anything in the IT space. Remember, there was a rapid rush to hire in that area. And so the number of postings has just dramatically dropped, most likely because the people that they wanted, they got the job, and so now they're developing, hopefully, great apps and all that stuff. So if we go over to the S&P here, the S&P and the NASDAQ were the focus today, and a lot of it, if you look at headlines, it's going to be due to Nvidia. Nvidia hits a new high there. They're worth $3 trillion now. They now take over second place. They booted Apple down a spot, so they're the second most valuable company out there. But to be fair, other names helped out as well. So if we go over to the S&P, right, here are the stocks that contributed the most amount of points to the S&P for the day, right? And then I'm going to go further here. So the S&P gains about 62 points. Of the 62 points, Nvidia was 16 of it, Microsoft 6 and 4, and you can see the names there. So these are your top 8 biggest contributors. Well, the number of points that they contributed to the rally today was enough to account for 63% of the entire market's gain today. So in other words, I go back over here for a second. We say, okay, of everything that was gained today, shave off 63% of that. And if these 8 stocks didn't participate, we'd have had a rally that was 63% smaller today. So that's, It's pretty impressive. But as you can see, it's all in that tech space. Do you see a retailer in there? Do you see a utility company in there, an energy company, a consumer staple company, a real estate company? You don't see it because all the action still remains on these really big headline names. Now, if you go over to the NASDAQ, it's even worse, or better, however you want to look at it. Nvidia, the NASDAQ gained 330 points. Nvidia, 74 points of the 330 points today. Add in Broadcom, Meta, Microsoft, AMD, and these other tech names. And now you have these 8 stocks representing 73% of the gains all day today. Pretty cool. Fun fact, year to date, the S&P is up 530 points. Sorry if I'm off 1 or 2 there. So it's up 530 points. And just Nvidia has accounted for 194 of those points. That's 36%. So if it weren't for Nvidia, you could take basically 200 points off the S&P for its year-to-date gains there. Thought that was pretty cool. All right, elsewhere around the market, bonds. Got a 5-day rally here going on in bonds. This is good, right? This also correlates to what we learned today. Hey, the economy's slowing a little bit, but not too much. And that means interest rates don't need to go higher. In fact, maybe they can go lower. So you see the price of bonds going up, which means interest rates are going down. Maybe a little better news there if you're looking to buy a house or take on some kind of debt. Crude oil. So, they got some favorable numbers today on inventories. We don't usually get into that, but if you want to, we can. But we still have a double-digit pullback off of highs. If you're looking for that area, I don't know that this is where you're looking, but if you're looking for things or you're filtering through things that have pulled back 10% or more off of highs, you're going to find oil in there. Gold, there's not much to say here. Pretty much still uneventful. These little fits and starts continue here for gold. Maybe Bitcoin stealing its thunder or whatever's going on over there. So that is that. Hey, before we go on to stocks in the news, I thought let's try something different that we haven't done in a while. We're going to look at the sector breakdown here and see what stocks are interesting, overbought, oversold, whatever. We have communications services hitting new highs today, and that means it is in first place. So year to date, the communication services up 17%. That beats out utilities, which is the second place one, at 13%. Inside of communication services, it's a little difficult, There's going to be some overbought stocks. T-Mobile is, in fact, the most overbought stock in the communication services sector, followed by Take-Two Interactive, for those of you that like your counter-trend looks there, and Electronic Arts would be the third most overbought stock in the sector. So I'm not pointing this out as something you buy or whatever, but some people like to look at that and say, oh, I'd like to take a shot on maybe the other direction there, or bet that it's not going to be, going any higher. Most oversold stocks, meaning the stocks that have just not participated in this most recent rally, is going to be Omnicom and, is it Disney? Yeah, Disney. So Disney not participating there either. I mentioned utilities being the next best performing sector for the year, up 13.75%. We won't spend a lot of time on this. I don't know if you guys like looking at some of these utility names. I think CenterPoint was the only overbought. Yeah, that's the most overbought stock there. So we don't really have to look further there. If we go over to the tech sector, so tech finds itself in third place, and if you like, we'll stop there. I might go to the bottom, actually, and look at some of the weaker sectors. But the tech sector, obviously having a great day today. There's nothing to complain about there if you are a tech investor. It is considered overbought, so just a heads up there. And 50% of all stocks in that sector are over their 50-day. Can you guess what the most overbought stock is? Yeah, Nvidia. Great job. Enphase, second most overbought stock. That actually got a favorable rating from Goldman Sachs just yesterday. They did a whole thing about why they think that'd be better. Lots of big words and stuff. And then HP is going to be your third most overbought. Now, if you like the weaker stuff and you're trying to build a list, Intuit is the most oversold in the tech sector. That's going to span from their earnings there. They did just start to work to implement, I should say, AI into some of their stuff. And then you got Salesforce.com. That's also due to earnings. That is the that is the most oversold stock in the tech sector. On the downside, the weakest for the year, you got utilities down 4%. Real estate down 4%, and with the rates falling. Remember, we talked about that earlier in the week last week with utilities. what are hedge funds doing and what are mutual funds doing right now in the utility space, you would expect that if rates continue to, well, even stabilize here, that real estate's going to attract some attention as well. For the moment, and we did this last week, I won't go over it again, but in that sort of like healthcare and cell tower space, that's where the action is. The data centers as well, not your traditional real estate companies right now are participating. So just a heads up with that. For example, like a hotel, host hotels. All right. Traditional real estate kind of thing. Oh, they're not really participating there. So that's where you would look. Weyerhaeuser counts in there as well, if you want to look. Okay, let's go on over to stocks in the news. I just wanted to have some fun with that today to bounce around a little bit, you know? Hey, Amazon, not horribly a stock mover today. This is not the type of thing that would move the stock, but if you're a Twitch subscriber, they're going to be raising the prices on you. What else is new? American Express. eBay said, we're just going to stop accepting American Express. We've had too many fee disputes here. We can't keep up with it. I didn't know that was going on, but that is going on. Dollar Tree, one of the bigger movers here today because Dollar Tree says, hey, how about that Family Dollar? Maybe we'll just sell it. Who do you think's going to buy it? Any thoughts? AT&T, if you tried to call today, well, I think it's solved now, but if you tried to call and you're an AT&T subscriber, you couldn't call other cell phone companies. I think I have some questions. United Healthcare, by the way, dividend goes from $1.88 a quarter up to $2.10 a share. Yes, that is right for United Healthcare. We'll return a little bit of cash to shareholders. I'll take your questions if you have any questions. And while we're waiting for that, tomorrow you have Big Lots reporting earnings, and I believe Smuckers. Yes, Smuckers will be. Oh, DocuSign as well. So that one's been a little bit wild lately. I say that because, like, look, imagine just being a passive investor and you're like, all right, somewhere around 63, 64, 50. Well, I'm going to say 50 even, right? So you're in that range. $13 range for that is a little bit wide, and it has been for a while. So just a heads up there if you're participating. And by the way, can I get the data here? Let's have a look and see. DocuSign is a 50-50 chance that it'll be up or down. The last 8 earnings reports, 4 were down, 4 were up, meaning the performance of the stock. The worst one, or the best one, is Smuckers. And the worst one, I guess, has to be DocuSign. Of any of the names that matter. Big Lots actually beats them. What those guys are doing. Anyways. Let's see here. So let me pop out the deal there. There we go. With utilities running up recently, REITs next to make a positive run. That is the assumption there. There's no, so the bigger companies do a thing, they call them fund flows, and they publish once a week, but they kind of get more insight into that, like on a shorter term basis. And there's really nothing there that shows real estate or big money's moving into real estate just yet. I suspect that would change. Yeah. Oh, and I covered that already. Sir Francis, I read today that Texas is starting its own stock exchange, the Texas Stock Exchange. I had not heard that. You know, back in the day, actually, one second. Sorry, I just wanted to share. Actually, back in the day, there used to be a San Francisco Stock Exchange. And others as well. Oh, this is the New York one, but I have a little book. I keep it in a little binder there. This was the pamphlet that they would send out from the stock exchange. And this is October 1953. I've got a bunch of these. I like collecting these little Wall Street things. And this one, the topics in this exchange publication from the New York Stock Exchange, should I buy stocks? Eddie Rickenbayer's best formula and favorite shares of savings banks. It was 10 cents a copy if you wanted to buy that back in the day. And I just thought that was cool. Anyways, so yeah, there was a Philadelphia one. There was San Francisco. I've got a couple of the others as well. CNI CP looking pretty cheap. Ooh, he's got his focus over there. Why'd you stop using the other platform? It stopped working. I think we have to upgrade it, but I didn't have time to do it. Got a lot going on. You see a silver lining for Tesla. What is a silver lining? Silver lining could be bullish. It could be bearish. Not sure what you mean there. It has been unbelievably quiet. I'll give you that. And then I think, don't they have a rocket launch? Yes, there's a rocket launch coming up. I'd like to watch that. Chances of beating historical, oh, wait a minute. Chances of beating the historical average of a pullback leading up to the election. Chances of that. So we've covered that in the past where here's the average and here's how many times we did have the average and we didn't have. I could, no, do it now, but we covered that, like how many years were way better than expected or worse than expected. Yeah. Thank you for the AI show and the stock list. Yeah. Can you update that with software stocks, not just the chips, like you and Roblox? Did we not make it there? We did 2 days. Oh, and we didn't do it. So we did a couple days worth breaking it into sections there. And then lucky me, I put my house up for sale just to see and sold it in a day. So I got a little busy there. I'm sorry. I did miss that. Yeah. Tom's got some Uber, he says. And in particular, he's got a 65 put. You sold a 65 put that expires this Friday. You sold, okay, I just want to make sure you sold it. But I don't know what you mean by you think you will get filled. So if you sold a 65 put, oh no, it's trading, oh, so you want it, okay, cool. And your break even's probably below, I'm not sure when you sold it, but if your break even's below like 62.75, that's pretty sweet. So you're hoping, oh man, 2 more days, just right here, just stick around that strike price for me. Okay. And you don't really have anything coming up, right? What is this guy here? That was today. You got not much coming up. All right. Go. I don't know if you should sell more, you know, or what size position you have there, but I will cheer it to stay at 65. Any good news coming down the line for Tesla that could boost it back over 200? Maybe getting through the lawsuit thing? That's not going to happen, I don't think, soon. But does Elon Musk get all those billions or does he not get all the billions? I don't know that that's a stock mover, but it has been. So the result of that, maybe. Yeah. Fun guy. Why is the stock market up so much? What in the world is going on over here? The presumption of lower rates. When we get this economic data that shows a little bit of weakness, not too weak, just a little bit of weakness, then it starts making people believe that the Fed can cut rates. And the idea there is that the Fed has lower rates, more people will borrow, more companies will borrow, it will stimulate the economy. They will go back into, well, not besides Nvidia, they'll go back into R&D mode, expansion mode, CapEx mode, all this stuff. And so that stimulates the economy again. And obviously that provides higher earnings and the stock market moves on projected forward earnings. So it's, you know, kind of how it's going right now, but it is what it is, and we will be here to talk about it. I did cover everything I want to cover today. By the way, Cody's got something over here. What do we got?
And usually our guys and women give them a little more scoop. So, all you got to do is kind of like, and usually our guys and women give them a little more scoop. All you got to do is kind of like, and usually our guys and women give them a little more scoop.
Victor H is your current leader of
and usually our guys and women give them a little more scoop. All you got to do is kind of like
your top 5.
And usually our guys and women give them a little more scoop. All you got to do is kind of like,
he could just be talking.
And usually our guys and women give them a all more scoop. All you got to do is kind of like, and usually our guys.
I thought that was cool. All right, let's wrap it up there. We'll be back tomorrow, I think. And we'll do this all over again. See ya.